Hello, hello, hello. Once again, it's Jared Havens here, CEO, co-founder of Credit Life. Wanted to post here in the group on free student loan advice just because I'm trying to do this weekly. Hopefully, I got a new webcam. It seems like it's messing up, so I don't know. I might need to tweak its settings, but hopefully you guys can see me and hear me okay. I want to talk about defaulted federal student loans. I've noticed in the group recently with Tyler letting me know that a lot of people have questions surrounding federal student loans and that they're in default and kind of figuring out what is the best course of action. If you're in a rehabilitation, is there anything that you could do to change the terms, things like that. So I'm just going to go through an overview on the best options and the analysis that we take when working with a client who has defaulted student loans. So the first step is, clarifying what type of loans you have. So by doing that, we'd go through what's called FSA ID. We'd create the Federal Student Aid ID that allows us to access a full history of your federal student loans. Typically, we'd also want to get an access an online consumer credit report. That way, we could also cross-reference that to the report to see if there's any potential private loans in default as well, because the path of settling or handling private loans is completely different than federal. But once, let's just say all we have is federal, once we've analyzed and figured out what the status is currently, at that point, we need to figure out the best course of action for you. And that ultimately comes down to your financial situation and your goals. Goals is a big one. A lot of people don't fully understand the course of action that you might take today and how that impacts you in the future with your goals. So to give you an idea, let's say you want to be approved for a mortgage. Well, if it's more of a short-term goal and you qualify, we may pursue what's called an income-based consolidation if you qualify to get you out of default that way, because that would be a quicker process, roughly 90 to 120 days. The rehabilitation, however, to get you out of default that way is typically a 10-month process, not including the negotiation of back and forth. That may take up to 90 days of getting into the rehabilitation properly, and I can explain why that is in a moment. And then you make 9 voluntary payments on time within a 10-month period. At that point, your loans are then out of default. Default remarks are removed from your credit report. And if you did everything correctly up to that point in the negotiation of the rehabilitation, you can also see significant savings in collection fees and penalties, okay? That's the key. So what are the differences? Let's talk about the consolidation first. That's more straightforward. If you have defaulted federal loans and you are not on the Treasury offset list, there is a chance that you can be approved for an income-based consolidation loan. What that is essentially paying off your defaulted loans and having one new loan with one payment that's based off income. That's going to be the income-based repayment option, though, not the pay-as-you-earn. So there's a difference of 10 to 15% discretionary income. So your payment itself might be a little higher than what it would have been by doing the rehabilitation first and then going to, let's say, pay-as-you-earn. But here are the benefits. You get out of default faster. Like I said, 90 to 120 days, you can get out of default, which can help you get to your goals a little bit faster, just because if you are defaulted on a federal student loan, you're on a list called CAVERS. And if you're on that list, you can't obtain any additional federal financing. That includes FHA and a mortgage, right? So that's a big deal. Now, rehabilitation, that's something I want to go into more detail on because to me, this one makes the most sense for most people. What we first do is put together what's called a statement of financial status. It's a financial document going through your situation. Sorry, someone's just coming in. Going through your situation and figuring out what's coming in and what's going out. There is an approved form directly from Department of Education that allows us to fill out what expenses are acceptable, because what we're doing is we're painting the picture of what your financial situation is to then negotiate a voluntary payment arrangement in the rehabilitation. Keep in mind, payments can be as low as $5. So that's a big deal. That can be very affordable for most people. But once again, that's temporary. That's based on the rehabilitation. Next step, though, and this is where things can take a little bit more time and some back and forth. The goal is to make sure that it's included in the rehabilitation agreement that we have removal of default remarks once you've completed the program and you've been rehabilitated, but also a significant reduction of collection fees and costs. That in itself, I saw someone talk about 14,000 in fees. This happens. If we would have been proactive, I'm not calling anyone out in a bad way, I apologize, but if we would be more proactive up front and seek a lot of times some professional counsel, there's some things that can be done. Does a process take a little bit longer? Yeah, but it's well worth it because there's a huge savings that can be done that's included in the rehabilitation agreement. I mean, that loan could be thousands of dollars in savings. So there's a financial benefit to doing rehabilitation as well. But keep this in mind. You go through all this, we get all this accepted, you enter into the voluntary payment arrangement. Well, then the key is, as you're making those payments on time, 9 payments in a 10-month period, that's when you get out of default. A couple things we can do. One, we can negotiate what's called an escalated payment. Some places allow us to do that. So one, we've already saved you a ton of money. We have a payment you can afford in rehabilitation, default remark removal when you've completed. Now we also negotiate, if we're able to, escalated payment. We can knock essentially 2 months off your program by making a payment that day and then making a payment the next day and then going into the monthly payment thereafter. That just shortened the total amount. So yes, remember, the goal is to make 9 payments in a 10-month period. If we beat that in like 7, 8 months, booyah. Now it has to be based on the payment terms agreed upon. It cannot just be, hey, I've just made 9 payments in 9 days. That doesn't work like that. It's got to be in the agreement. But huge benefit there. One thing to remember, if you're getting close to being out of default, this is the crucial point for you to be very proactive in making sure you know where your loans are going. Because if you've been making payments to a third-party collection company in the rehabilitation, your loan's going to get picked up by a federal student loan servicer, and you have to stay engaged in that process because you do not want to fall behind on payments. What happens is the loan goes back to the original terms. A lot of times it's a 10-year term repayment plan, which your payments could go from $5, let's say, up to $400. So you need to be prepared for that. And you also don't want to get behind on any payments because once you default, if you've already gone through rehabilitation, you default again, rehabilitation is not an option. At that point, you really don't have any options except for settlement, which is very difficult. You do not want to get yourself in that type of a position. So you have to be proactive. That's one thing we do with our clients is we time it out that once they're set to be done, we help navigate through that next step to make sure we don't miss anything. That next step would be knowing that you're out of default, restructuring the loan now that you can be approved for all the different repayments since you're out of default and get you into a new repayment plan that you can afford now that you've completed rehabilitation. So I'm going to be doing this every week, guys. I want to just give you these tidbits of information. If you want to schedule a consultation, Tyler Honning-Schmidt runs our Student Loan Assist division. Right now, I do work with current clients. I'm working with our current clients now, but Tyler is extremely well-versed with student loans. He's actually running a team here at Credit Life helping our clients going through the student loan process, the navigation of different repayment options. But I've been doing this for a very long time, and I just want to give out as much education as possible. And if you'd like to schedule a consultation, please do. I included a link on this. There's a no risk, no obligation consultation. Just go through and figure out what options are available. You know, there can be a lot of things that you've missed, and I want to make sure that everyone has the opportunity to make an informed decision based on their situation and goals. Okay, it's very important because student loans are a big deal. Thank you so much, guys. I plan on doing this a lot more. Thank you.